and welcome to the markets of your choice. And we'll be going over your requested markets that you had emailed Paul. Note that even if you don't trade the particular markets I'm going through, all the strategies I'll be showing you on these charts can be used in all markets and all time frames. Just as we always do, we always put up the risk disclosure, reminding you. Hi, welcome to the session. I'm just starting again, just repeating the introduction because I forgot to start the recording. So we're going over the markets of your choice. And even if I don't go over a particular market that you trade or invest in, remember all the strategies and ideas I show on each and any of these charts can be used in your market because candlesticks work in all markets and all time frames. And as we always do, we start with the risk disclosure, reminding you that no matter what market you trade or invest, there's always a risk of loss in that market when you trade or invest. So you can go to the full disclosure at this link down here. So let's start with Ethereum. And again, even if you're not trading these markets, you can look at the strategies that we discussed to apply it to your particular markets. So, big rally last week, and notice this red candle did not get more than halfway into the green candle. So this is not a dark cloud cover, but nonetheless, the fact that we've had 3 consecutive highs right around 3,500 does define that as first resistance. But what I want to point out is the action over here. Again, you could use this for education, even if you're not trading Ethereum or any of the cryptos. So notice we have a hammer. Notice the sell-off here, a little bearish engulfing pattern. Candles are great at giving reversals. And then we had a hammer. And notice what this hammer is confirming. Right around a prior support area within a few dollars. And for those who have our education, the low of the hammer is a potential support area. So notice session after session after session, especially on this big sell-off session, and we know it sold off because at one point market opened here and closed and sold all the way down here, and it had bounced back, confirming the support of the hammer. So this could have been a great potential buying opportunity with a target. We've exceeded the target, but the target would be the bearish engulfing pattern. And rather than placing a stop under the hammer, I'd probably place a stop, under the lows here. Okay, let's look at another one we got requested. Okay, let's look at the S&P. Okay, by the way, these lines are 20 and a 50-day moving average, and this is how I use to define a long-term trend. It's a long-term trend that's still up. And notice, speaking of hammers, look what confirmed. Okay, the lows here, another hammer. So this defines our first support in the S&P. Short-term trend I'm having as neutral. The hammer is a positive, but the market is making lower lows and lower highs. So a little bit of a bear channel with the key resistance at the hanging man session, first resistance at the falling window. Now, one of my favorite rules for those who are members of mycandlecharts.com or follow us other ways with our education is change of polarity. So what that means is that the old support, if broken, becomes potential resistance. So if the market breaks under this support area, if it does, this support should then become a potential resistance area with the next target at the rising window, over there. Okay, we'll look at, again, these were requests emailed to us. ADS. Okay, long-term trend up, short-term trend also up. The rising window has potential support at a fairly important juncture. Okay, notice the doji here, and often a doji becomes resistance, and this red candle wrapping around the doji, that is also a bearish engulfing pattern. A typical bearish engulfing pattern is a red candle wrapping around a green candle. It's fine to also be a doji. So that's another resistance area. So although the short-term trend is up because the market's at a new high for the move, and when I say for the move from down here to here, but this is still a resistance zone up at around 122.25. And if it closes above the, let's say, 123 area, let's make sure we're in uncharted territory. Okay, so a lot of these markets were in uncharted territory. If it closes above, let me go back to the daily, it was a weekly. If it closes above this zone here, right here, this zone, just as it was heavy resistance with the bearish engulfing pattern, the dark cloud cover, a doji, a bearish engulfing pattern, if it closes above this resistance area, it's very important for the bulls to maintain control. This old resistance from about 120.5 to 122 becomes support. Boeing, long-term trend neutral, the 20s touching the 50, short-term trend down, but, okay, notice what's acting so far as support, the low of the hammer. So that's a potential for a support area. But the market is in a bear channel. You can see over the last week or so, this is a new low close for the move that began here, right around the 255 level. And if the market breaks under the hammer, then the next support of consequence is look at all the support here, okay, right around the 208 level. So on a short-term basis, the market's at fairly important support and resistance, only because it was tested 1, 2, 3, 4 times in a row at the highs from late last week. Okay, a lot of requests, not surprisingly, for Bitcoin. Okay, let me put the update here. Let me put the moving averages on here. You can see the long-term averages in Bitcoin are actually is down now. The market, the 20-day crossed under the 50-day moving average. It's a little bit of negative, and here's the magic doji, okay, acting as potential resistance. So that's our first resistance area. Okay, the lows over the last half a week or so, around 52,500. But look at this. Hammer, hammer, bullish engulfing pattern. So key support in Bitcoin potentially right around 47.5. And on a close above the high of the doji and the shooting star, we would then look for next resistance at the major highs of 65,000. Okay, let's look at a currency. And as I mentioned in the beginning, even if you don't trade currencies or cryptos or Boeing, everything I'm talking about here could be used in your market. Okay, long-term trend is up, short-term trend is down. And what I'd be looking at now, okay, is the support zone, which is just about holding right around the 120 level, give or take. And on a close under that, then I'd be looking for the change of polarity. Over here, we got near there, but right around here. Okay, this is an evening star. Green candle, small real body, red or green, and then a red real body that gets more than halfway into the green, and obviously did. So this is potentially a key resistance level. the GDX. You know, something like this, we have so many gaps, it's not important. I will look at a weekly to see if there's any windows or gaps, because in the weekly it does become important. Okay, no, nope. Okay, so with this, I'd just be looking long-term trend up, short-term trend also up. Okay, we have a support zone. Okay, this is not quite a hammer because the lower shadow is not twice the real body, but about 34, 34 and a half. And resistance, okay, the zone over here, about 36 to 36 and 3/4. And let me show you something interesting from an educational perspective. Okay, as I mentioned before, once the market breaks above resistance area, as you see here, it's very important for that old resistance to become support. So this market got above resistance area, but couldn't hold above it. So that is a negative. That's called falling off the roof. And very often when that happens, the market returns to the low that it had just before the rally. So in this session, actually, with the failure to hold above the resistance area, the target became and still is right around $34. Note that does not mean it's a support area. It just gives a target, and that means the high of the falling off the roof remains resistance right around 37. CHPT. Okay, long-term trend down, short-term trend also down. Okay, you see this dark cloud cover, back-to-back dark cloud covers, really defines resistance right around 27. And notice this bullish engulfing pattern that confirmed the lows here and here. Classic retest of support. Okay, defines support right around 19 and a half. MRNA. Okay, this is a nice example of when a candlestick signal confirms a Western signal. Okay, look at the resistance, high wave candle, dark cloud cover, a bearish engulfing pattern right at a resistance area. So 190 key resistance, a tiny window here. I'm going to draw it with an arrow. Notice how nicely that held as support. That's why I like small windows. The smaller the window, the tighter the support area. And it looks like it's holding so far, but not far off the lows. But we have a window here, and then another window here as support, and we see, as I mentioned, all that resistance. Tesla. Okay, long-term trend up, short-term trend down. Okay, because the market is in a bear channel last couple of weeks. But let me give you some positive. Here's the bear channel. Dark cloud cover, right at a falling window. Here's the window. And little hammer here as a first support. And a bullish engulfing pattern. So it looks like the market is trying to bottom out at a support level that was in place since early April. right around the 660 area. A small window here, but I think the more important support is here at this hammer and the bullish engulfing pattern. Okay, from late March. Okay, low price stock, but technicals are technicals. So notice the support area here. It's now become resistance right around $8. And then above that would be this bearish engulfing pattern. Red wrapping around the green at around 11. And support, potential support at the major lows here. On a close above the lows here, see this bullish engulfing pattern, but the market closed below it. On a close above, I would say $8.50, that'd be a short-term positive because it would show that the new lows could not be maintained. Right now, it's up to the bears to hold control of the market. And if they can't do that, that would be a, like I said, a short-term positive. Let's look at TLRY. I'm just trying to expand it. There we go. Okay, we can see the obvious resistance area, the falling window. This is a nice example of candles in context because yes, there's a classic bullish engulfing pattern, but if you buy on this bullish engulfing pattern, where's the first resistance? You're actually right at first resistance, right here. So the market really would have to close above this falling window to be bullish. And so that's my resistance area, and you can see how it's stalled, and the market's there now on a close above the recent close above the falling window. My next resistance would be the prior support. See, once broken, it became a resistance area up at 21, and potential support at the recent lows here, which was a successful test of the lows back in January, right around 15. SVM is a nice example of a box range. Okay, the Japanese, what we call a lateral trading environment. Oops, sorry. Let me make sure. There we go. Actually, let me go back to make sure I didn't miss anything. Okay. There we go. Yeah, let me make it a little bigger here just to. Yeah, but we saw this before. I just wanted to make sure I got the last date in and it was correct. So let's get back to SVM. There we go. Okay, so here's a box range, and the market broke out of it. So we could use the 40-cent height of the box range, add 40 to 560, and get a target to $6. You know, not much, but it's a nice way to show you how to use box ranges. Just take the height of the range, whichever way it breaks out. If it breaks out to the upside, you add the box range amount. If it breaks to the downside, you subtract it. So we did get to that target of 6. Okay, we're back into the box area with potential support. Okay, right around 520, and the highs has some resistance, but I think more important resistance is the falling window. Okay, just look at a couple more. Canadian, all trends are down with the prior support area now as first resistance, and we go back as far as necessary to find another support area. So let me go to the monthly. And interestingly, we can see the lows of 2017 right around the 120 level, okay, as potential support. Get back to the daily. XLK, short-term trend down, long-term trend is up. But the major issue was the break under the support area, which was a box range. So you can see it's a $4 box range. So you take $4 from the break, 140, you get a target to 136. Now, it doesn't mean the target is support. I mean, it happened to be support within a few cents, but that just gives you a target, doesn't give a support area. Part of the reason the recent lows held is the rising window over here. Okay. And then if the market closes under that, then we have this other rising window. And our areas of resistance are first, the falling window at the arrow. And then the more important resistance is the prior support area, because anybody who bought here is now losing money. So the buyers here may become sellers later on. Okay, and that wraps it up. Thank you for joining me. But let me bring to your attention one of our new features. Really excited to announce this. It's our support group. And as shown here in the text, it's 3 live session programs to help you develop a winning formula. It's going to be interactive, with the first one actually this Saturday. And if you go to this link here, you'll be able to see a little video about it. Okay, this is just a screenshot, so don't click on this little play button, and some more details about how it works and what it's all about. So it's a brand new product and service, and we're really excited to have you among the first to join us in our support group. So thank you so much for joining me. Have a great rest of the week.